You make of the, I was a bit tongue-tied. It's been a long day. What did you make of the session? Pretty good.
It's been a long month, but great to see a good day on the Australian share market, up by 1.3%. In fact, gains all across the board except for one area, and that was the healthcare space. But the thing about the move today was it was on very light volumes. In fact, it's the lightest volume that we've seen for the Aussie share market in 2 weeks now, about $5.5 billion worth being traded. But the market was supported by the industrial and the staples area. We saw Brambles, the biggest stock in that industrial sector, doing extremely well, up by 4.4% on hopes of capital management initiatives after the sale of Recall. And we also saw Woolies and Wesfarmers, traditionally very defensive stocks, doing well today, up by 2.3%. Today was an important day in terms of fundamentals. It's been a violent ride in August, but today's the day where we did see that magic 61.8% retracement level being breached. And if we just have a look at the last 30 days on the Australian share market, this is what it looks like. I've just overlaid the Fibonacci retracement levels over that move down, and you can see today is significant because we did manage to close above 4,300 points, which is around about where that 61.8% Fibonacci level was. So altogether, it looks like the Australian market totally ignoring what happened overnight, the disappointment over Merkel, Sarkozy and their meeting, with really no new results or no news on the Eurobonds coming out, and that negative lead from the US, which was down 0.6% overnight. Price,
it remained at that $4.90 level. Was that a surprise at all, ignoring the board but not giving any sort of upward movement in price? And would you expect it to change? Could we see, other bidders potentially come in?
2 months ago, we saw the board of Foster's rejecting that $4.90 bid from SAB Miller. But since that 2 months ago rejection, I guess a few things have changed. If we have a look at their Carlton United Breweries business, what we have seen is we've started to see margins fall, and it's the first time in a decade that we've seen it. So market share really coming under pressure. And if we have a look at this business, I guess 7 out of 10 of the biggest beer brands in the world really being held within this business. So Foster's really losing a little bit of their negotiation edge, and given that they did reject this bid 2 months ago and we haven't seen another bidder coming through, I guess SAB Miller having a pretty good chance at a tilt of Foster's. One of the conditions of this bid is a minimum 90% acceptance, so they're going to have to get 90% of shareholders over the line. If we have a look at Foster's share price, this is just over the last 52 weeks. This is what it looks like. I put a line at that $4.90 price, and you can see that most of the last few months we've seen it trading above that $4.90 price. But given that we haven't seen another bidder emerging, a counter bid, and that we have seen the beer market soften off a bit, I think SAB Miller in a much better place. They've taken this bid hostile, going directly to shareholders, and they're looking to get more than 90% of acceptances.
Michael, we'll kick off with Woodside Petroleum. The market seemed to like what they saw. Woodside up, well, just shy of what the broader market did. It was up 1.18%. High oil price really helping out.
We did see Woodside come in ahead of expectations. Peter Coleman, the new CEO, a little bit more conservative than Don Volti, but certainly if we have a look at the pipeline of different projects for Woodside Petroleum, there's a lot there. The market looking at Pluto, possible expansion there, Sunrise as well, and looking at a number of other projects. So it's going to be a pretty exciting couple of years for Woodside Petroleum. If we have a look at this result, it was though lower than the previous corresponding period, and we did see some impacts, but mainly driving this result and helping this result along was the high commodity prices that we've seen. We've seen oil prices once again very well supported in that first half of the year, and that helped to offset things like larger tax payments. So altogether, a better than expected result coming through from Woodside Petroleum. That dividend payment also better than expected. We were expecting to see a 50-cent interim dividend, and they've announced a 55-cent interim dividend. So Woodside coming in ahead of expectations, and the shares trading up today.